extremely important topic today that nobody talks about in trading, and that is how to fund your trading account. And people don't talk about it because they want to sell some unrealistic expectation of what trading is. And I'm not afraid to come in here and be honest and transparent and share the truth and reality of what trading is. And we're going to get into that. But a question that you need to think about is, how do you fund your trading account, not just today, but over time? That's going to give you the best chance of success in this business. Trading is an extremely capital intensive business model that takes a lot to get started and is also very expensive and unreliable. It's not necessarily the best business model unless you automate it in a way, and also if you have big capital, it can become pretty good. But before we get into the business model of trading, let me compare by explaining some other business models that are less capital intensive and less expensive. One of them is having some kind of online coaching service. One of my first businesses, you guys know I was a professional Magic the Gathering player. I had a business in the space where we had a private group and we would train tournament players. I started this business with basically no money in the bank account and almost no money down. I spent like $100 on ads. It was basically free. I used YouTube, organic social media marketing, phone calls, and we delivered it through a Facebook group. I spent no money. Over the next 3 or 4 years, made a couple $100,000. And the most that I ever spent at one time, or lost or expensed, was maybe a couple $1,000s at the end. I had some payroll for part-time workers. I would pay them out at the end of the month. So we'll say I made a couple $100,000 on a $2,000 max historical drawdown. This is a business model that is labor intensive. It wasn't even that labor intensive. It was an awesome business. But it's a business model that was not capital intensive or nor expensive. More recently, I started a business that I do private guided hiking tours. I'm a private adventure guide. This one I started also with nothing down. I didn't need a car, but I had a car anyways, and it's an old beater Toyota Corolla this current car I have is $2,600. But my actual cost was I got an LLC and a website for less than $100. And it's a business that has been returning me since I started. It's not full-time, but $2,000 to $3,000 a month. This is a labor-intensive business, but not expensive in terms of capital. Not capital-intensive and also not very expensive. The most I've had to spend would maybe be car repairs or getting a new car to replace my car. But again, I needed that anyways. But basically not a very expensive business. Now we get to trading. If you want to make $3,000 a month without drawdown, you need $1 million. The risk-free rate of return is 4%. If you're making $40,000 a year, that's 4% of $1 million. Okay? It's very capital intensive, very expensive. Now you can return greater than 4% if you risk more. Here's the thing though. What's considered an acceptable trading system, if not even a good trading system, is a trading system that returns annually twice its a max drawdown for that year. So to make 10% in a year, at some point you drew down 5% in a year. I'm not saying that's a great trading system, that is an acceptable and marketable and even potentially professional trading system. So in that case, to make the $40,000 with a $10,000 account, it's not even possible because you're risking a $20,000 drawdown, you'd blow up. With $20,000, you're risking losing everything to make the 40. If you have 100, yes, you can maybe make the 40, but you're risking a $20,000 drawdown. It's a very expensive business model, right? Now, the more capital you have, the less risky it is though, because if you have $1 million and you risk $20,000 to make $40,000 over the year, or not risk 20, but have a $20,000 drawdown to make 40, it's less risk, right? So the truth about trading is, it takes the more capital you have, the easier it's going to be. You need a lot of capital. It's very expensive. It's also inconsistent, not just on an annual basis, but on a monthly, weekly, and daily basis. So in order for trading to make sense, to be worth anything, you need to accumulate a lot of capital. Could be now or over time. Some of you guys get here because a family member died and you received some inheritance, and you have money that is beyond what you need, so you can get into investing or trading. Some of you, well, that's not a strategy though. We'll talk about strategies for funding your account that aren't prop firms. We'll talk about that too. But a lot of you guys have this misconception that you can make something from nothing in trading, and it's not how it works. There's plenty of businesses that you can make something from nothing with sweat equity. Trading is not one of those business models. It's very expensive. If I'm bursting your bubble, you might realize you should actually pick a different business and come back to trading later when you have a lot of capital to work with. That's how it is. So now we'll come to you as an average person, but there's a misconception when people are like, nobody would sell a working trading system because they would just make infinite money for themselves, or they would go to Wall Street and start a hedge fund. Well, first of all, someone can have a trading system. One of my business partners, for instance, he's a young, early 20s kid. He doesn't have very much money, but he does have trading systems. And again, these trading systems might return 2 or more times the max, the annual drawdown. If he's got a couple $1,000s, the most he can make is $4,000 in a year, or something like that, right? That's realistic trading as well. So it might make sense to go market it. Now you might say, why not go create a hedge fund? Well, one of the books that I read, this book covers creating hedge funds, Pitbull by Marty Schwartz, and that goes into actually creating a fund. So if you think professional traders aren't raising capital and money, they are. And also you're going to realize the more you have a system that works, the more you're going to want to raise capital and get more money to put into your own fund, because you realize like how it works is if you can keep adding to it over time, either dollar cost averaging into the market or dollar cost averaging into your trading system, the more you can grow it. And if you're bleeding it dry by withdraw, you're increasing the chances of blowing up. Anyway, so if you're on Wall Street, me personally, I don't see a huge difference between going and trying to take people out to dinner and talk and present and sell them on giving you money to manage versus going to retail traders and selling a trading system. It's the same thing to me. But I don't know about you. I don't know anyone on Wall Street. I don't know a lot of people who have random 6 figures sitting around that they can lend me. Because also, if you realize the typical profit split, say you're trying to raise outside capital, the typical profit split is hedge funds do a 1% to 2% management fee or a 20% performance fee. So if your management fee is say 1%, to make 100,000 in a year, you need 100 times that. So 100,000, a million, 10 million. You need to manage 10 million. Where are you going to find like $10 million? It's not easy to start a fund. I don't know where I would start with that. Or to return $100,000, 20%, 5 times that, you would need to return $500,000 for your clients, and to risk a $250,000 drawdown potentially, you need a lot of money, right? You need to raise a lot of money, and it's stressful. So clients come and they call you and they say, "Why is my fund down? How they pester you every day? How's the fund going? Should I take my money out?" It can be very stressful, and it's also a lot of work when there's big clients and you're setting up meetings and presentations, and it detracts from the trading. So if you think professional traders aren't out there raising money and they're just mostly trading on their own, you're wrong. You read Market Wizards. Raising money is part of the game. So again, we'll talk to normal things, but this is one of the reasons why a lot of traders end up selling retail trading systems to retail, because if all I'm doing is trading and building trading systems, and I have a valuable thing that someone would buy, and I have no access to Wall Street, and Wall Street's a lot more stressful because these people have a lot more power and control over you. And it's a lot more responsibility because also you need to get a money manager's license. You need to go through all these steps. You need to spend money on the money management license. It's just more capital down versus you can sell trading signals or trading system to retail. It's super common. It makes sense to me where it's like I've developed these trading systems. I don't have enough capital. How much of capital is enough? No amount is enough. It's not that it's not enough, but more is always better because I can either risk more to make more, or I can risk less to make the same and just decrease my chance of blow up or having a big drawdown. So that's why for you, honestly, like if you're getting into trading, you might think if you're all in on trading and you're developing trading systems, sell a system. I thought I would never do it. And here I'm not advertising it for you, but it just makes sense if you're doing trading as a professional and you realize more capital is better. What assets do I have that I can sell? Right? And it's easier. It's something I know how to do. I don't know how to sell to Wall Street, but I've run plenty of businesses where I do YouTube and stuff and sell. Anyways, I'm not trying to sell you on my system. I'm just kind of explaining different ways to raise capital. So raising outside capital, you might be more connected than me, but to me it's difficult, more responsibility, more legal risk, more stressful. You can raise money through trading to retail. But for a lot of you guys, it's going to be working a job, starting another business, and simply squirreling away and adding to your account. So that might look like you have a cheap lifestyle and you have a little side hustle and you're making an extra $1,000 a month and you're able to put that into investing and trading and your dollar cost averaging into the market or your trading system. And over 5-10 years, you can do a lot with it. But you have to think adding to it, funding it, not withdrawing from it. When you're withdrawing from something, it prevents compounded gains. It prevents something from really growing. And again, if this is an inconsistent income, because if you're trying to force gains in a market cycle that doesn't call for it, you're going to stress yourself out and you're going to blow up. You have to think about how you can fund it. So one way is to reduce your expenses. Another way is to increase your income. But a lot of it is increasing your income. And what you can do, so okay, trading, I've said it's a very capital intensive and expensive trading business or business model. It can also be very labor intensive. And that's why I do not ever recommend day trading, full-time trading, because now you have a business model that's labor intensive, capital intensive, and expensive. Terrible. The only real benefit of trading as a business model is that it can be very labor light. And you can do that either through having automated systems, algorithms, or trading higher time frame investing in a way where some of the best traders I know, they rebalance their account quarterly. They might check in the market here and there, but they only make decisions once a quarter, 4 times a year. It's very labor light, and you can return a lot over time with that. So what I recommend is you can start a labor-intensive side hustle that is capital light and inexpensive to raise your income, take that extra income, and dollar cost average into your trading system or the markets over time. That's realistic, that's reasonable, and that's going to cause you to not blow up. Also, because there's these stories of traders who get wealthy and they become accustomed to a lifestyle and they blow up and they lose everything. You do not want that. It could also be just being good at your job, good at your career, but yeah, I mean, if you're hoping there's a way out where you don't, there's just like nothing to something, there is, but not through trading. Now, if you think prop firms are the way to go, I got scammed by 6 prop firms simultaneously. Actually, they didn't all happen at the same time. Prop firms, they put very difficult rules that hamstring and prevent you from trading high time frame strategies, which are more effective, like the 30-day rule, intraday drawdown, and so on. So they force you into this box of labor-intensive day trading and taking on additional risk. You don't really have the capital you think. You think you have a $200,000 account. No, you have a 20K account. That's your drawdown. Actually, because of 20%, it's 80-20 profit split, you only have a $16,000 account. You have to jump through a bunch of hoops to try to get that 16K account. And they are going to charge unusually high slippage. On top of that, they're going to charge unusually high commissions. They're going to charge unusually high swaps. They're going to charge swaps on things that don't normally have swaps. Basically, they're going to jack up the fees on you. And even if you pass through all that and get a small payout, they'll probably send it. But you get a big payout and you think it's all going to be worth it, there's a good chance they're going to deny it, or they're going to slow it down and just drag things out and make it really difficult for you. That's my experience. I still have an $8,000 payout that's pending from a prop firm for over a year. I've never received it, but it's still pending. So prop is another, when people are marketing that, dude, it's just, maybe they haven't been through it, but the incentive is for them to fail you and find ways for you to fail. There's ones that are hard scamming you, which is denying payouts, and the ones that are soft scamming you by the commissions and fees and the rules. But it's just not, it's snake oil, fool's gold, they're lying to you. So I'm telling you the truth. I have some business models I've done, which, the first one I explained to you, the coaching business, was not very labor intensive, not very capital intensive, not very expensive. That was an awesome business model. Now I have the hiking adventure tour business, which is very labor intensive, but I love it. It's super fun, right? I'm out hiking, I'm meeting new people. Not very capital intensive, not very expensive. And also it can be scalable, and I can take the labor out of it by putting someone else in to take the labor. Those are two business models. There's dozens of others you can do. Day trading is labor intensive, capital intensive, and expensive, the worst of all worlds. And it's only fun because it's gambling, but it's not sustainable long term. Trading as a business model done right, still capital intensive, still expensive, but not labor intensive. It's labor light. So it's something you can think about taking your excess funds and adding and funding over time. So you have to ask the question of, how can I fund my account? You can raise outside capital. I've done a little bit of that, but I find it difficult. I don't like to do it. I don't like to lose other people's money. And there's more legal risk. And also the connections are hard. You're going to probably need to go to social media and market anyways. You go ahead and become a coach in the trading world. That's totally fine. Or just start a totally different business and just dollar cost average into the market or into bots over time. I think that's totally fine. So that's kind of my plan for 2025. You guys know I'm expecting a more choppy, bearish year than the last couple years. We'll see if I'm right or if I'm wrong. It also depends. I will follow my systems to a degree, but I'm just doing other things. Yes, I'm selling trading systems. I'm also doing a lot of hiking tours. I also have a part-time job where I do marine wildlife tours. I'm also doing YouTube. I'm also doing life coaching, and I'm dollar cost averaging into my bots. The crypto bots I'm going to run all year regardless. And also I'm waiting for ideally the market to get a low place and then my system to start giving signals on MTP and start dollar cost averaging in. But this is the first year in a while where I realized I need to really think about funding my account and not withdrawing from it. That's going to be more sustainable. So anyways, hope you find it useful. I've got a newsletter you can click down below. Yes, it's going to give you the option to buy the system, but it's also, you can join the Discord for free and a series of emails which have a lot of value in there. I give away so much for free. If you're not in there, you should check it out. Okay? Appreciate y'all much. Love. Talk to you soon. Peace.